Net Wealth Investments Limited is licensed to provide general advice. Our podcasts are not tailored to any one financial situation and may contain views of our presenters which may not align with Net Wealth's. The guests' organisation and Net Wealth have an arrangement for their financial products to be available for investment through the Net Wealth platforms, and Net Wealth may receive fees from the guest. More information about Net Wealth can be found on our website, including our financial services guide and disclosure documents. Please seek professional advice before acting.
Hi, I'm Matt Heiner, Joint Managing Director of Net Wealth, and welcome to Between Meetings. In this podcast series, I chat to industry professionals and thought leaders on what made their career successful and the opportunities and challenges they see on a wide range of topics as they relate to the delivery of advice and financial services. I hope you enjoy their unique insights. In this episode of Between Meetings, Greg Kirk, Executive Chairman of Implemented Portfolios, shares some of his experiences over the last 45 years in the finance industry. We talk about the important leadership traits required during the pandemic, the future of the workplace, and the challenges of the digital-only world on culture. We also discuss the importance of using technology to deliver hyper-personalised client experiences, as well as his involvement with new businesses Creative Mass and Lumient. Importantly, we look at and talk about his love of horses and his investment in breeding racehorse winners for the Sydney and Melbourne Cup. As always, I hope you enjoy the episode. Hi, Greg. Welcome to the show.
Thanks, Matt. It's good to be here.
Now, Greg, like everyone in the industry at the moment, you're an incredibly busy man. But as we were chatting earlier, one of the things that I didn't know about you is you've actually been in the industry for 45 years.
Yeah, it's certainly been a lifetime, you might say. Started in the late 70s, so it's been a long track record.
No doubt you've seen a huge amount of change in that time.
Look, it's been massive. You never really realise it until you start talking to other people, obviously, who are generationally from different backgrounds. You start to think about what the industry was like back then, and we were balancing, like in the early days in banking, we were doing a balance each Thursday on a big long piece of paper and mailing it in brown envelopes and through couriers, and it was a different world, mate.
But it's actually taken COVID in many ways to actually progress some of those old processes. Remarkable to think, and we're jumping straight into it, that digital signatures have only really taken off as a result of the fact that we're in isolation.
100%. I think it's been a really good intervention into a lot of, probably just to, get rid of a lot of the old beliefs. The fact that you had to be in the office every time to work. A lot of people, who probably were traditionalists, just had to change. And I think that forced change is going to be of great benefit for the industry.
Greg, when I think about your career, the word entrepreneur sort of comes to mind. You've done a whole range of really interesting things. You've worked in very large institutions. You've run and worked in a recruitment firm. You're currently involved in a number of technology firms, a managed account firm. When you think about your career, I think that whilst you've had many jobs, you've suggested that your favourite role is that of leadership, which was an interesting discussion.
Yeah, look, it's been the thing that, I took out of probably, even through school, sporting captain, those sort of things into the professional world, and very fortunate, at 21 to be leading a team. That was the first time. And again, in the old world of banking, that means you're running, relationships as well with businessmen in all areas of industry. And that's probably the best grounding that I could have had, is you understand commerce, but also you've got a lot of responsibility to go with it. And that probably set me on the course of always wanting to be in the leadership position, not from a control perspective, but being accountable for an outcome, and trying to help people, whether that's clients at the end or your team internally. So it's been certainly the one thing that's been a constant, whether it's in the big institutions or with the startup businesses. They all require a sense of leadership.
Leadership means different things to different people. You touched on a couple of them around accountability. No doubt your leadership style has changed dramatically since you were 21 years old. What are the things that you love about leadership, and what are the things that you feel are a real strength?
Well, look, I think the two things that I find is probably sometimes the poisonous chalice, so to speak, but equally the greatest benefit of being a leader is watching people grow, and in doing so, in getting growth out of your team or out of the individuals, there isn't a straight line. It's not linear. There's ups and downs. Sometimes that's being the therapist to people. Sometimes that's being the disciplinarian. And it's to me, it's the same as parenting. Some of the hardest things you'll have to deal with at times you do because that's what's in the best interest of the team or your kids over a long period of time. And the leader's role is to think over the horizon. And so I find those parallels between personal and business as a really important aspect. I enjoy parenting, not always, but generally it's an enriching sort of process. And so is leadership when you can see people that have worked for you or with you, or you've worked for, just prosper in life. I think it's a really wonderful outcome.
As a father of three very young children, I often think that parenting is the hardest type of leadership, and I actually go to work for a holiday.
Well, it's funny. I probably became a better leader. You asked the question earlier. My leadership improved after having children. There's no question. I mean, before that, you're learning in a completely different situation, and you're learning in a bit of a vacuum with family, even more so. There is no recipe. There's no right and wrong. Therefore, you really have to, I think, deepen your behavioralist skills, so to speak, and understanding what every outcome from every input. So I think they're the things that I've learned. I find them the same, though. The parallels for me are the same. So.
Leadership, particularly over the last 18 months, has really come to the forefront, and it's been a good test for all leaders, I think. In your role as executive chairman of Implemented Portfolios, what are some of the leadership traits that you found have been really important over the last 18 months, and what are some of the things that you've done differently to what you might have done historically?
Yeah, it's a very good point. Look, firstly, in leading a business the size of Implemented, it was a challenge initially coming into a small organisation, because having had the privilege of working in some of the bigger institutions with big teams, there's plenty of resources to do the job. So you really need to rebase your humility and and what you're willing to do, because half the time you're taking the bins out as well as leading the business. So that was probably the biggest change from one area to another. In terms of Implemented over the last period, I think it's really been a case of, again, we had to specialize in what we do and refrain from chasing opportunities that weren't core to our business. So a lot was sticking to our knitting, getting the momentum in the business, getting the scale in the business itself. And so I think the big pivot we made probably in the pandemic was, of course, the working from home was the same as many other employers have had to do, but we'd sort of readied the business for that well before, so we were cloud-based. And I think it was March the 9th of 2020, we decided at an offsite, funnily enough, that we'd all work from home. The next day, we went in and implemented that. And I think during the pandemic, it's actually been probably seen, it's come to the fore of how good a business Implemented is in terms of assisting the advisors that we service as well to be able to do more efficiently do business. And so I think we're set up for the pandemic world very well in Implemented.
Were you surprised by the growth that you were able to achieve during the last 18 months, given everything that was going on?
Look, I'm not surprised. I think always you're challenged, and there's always going to be challenges in the business. But I suppose we've ended up adapting as an industry and as a company much better than I would have probably anticipated at the start of it. I think everyone's view was more on the downside risk protection than it was that we were going to be as bullish or buoyant an industry as we turned out to be over these times.
One of the questions that every business is grappling with at the moment, whether it's big, small, or medium, is what the future of work looks like, and how do you actually take the best bits, if there was such a thing, from the last experience of the 18 months, or is everyone going back to the office? Are you going to be flexible? How do you see the future of work playing out?
Yeah, look, I think it's somewhere between the two polarized views. I don't ever see us going back full time to what we were before or say pre-pandemic. Um, I don't see us going the other end of the spectrum and always working from home and always doing Zooms, Teams, Google Hangouts, whichever medium you want to use. I think it's somewhere in between, and certainly it's a proposition that implemented is taken that we believe flexibility is a very key element of our employee value proposition. And to me, that fits the lifestyle of people as we move forward in this more digital world. But I think you need both. Probably a stickler for the fact there are some really great things to take forward from the way we were working to the way we should be working going forward. And some of those obviously exist around things like culture. It's very hard to develop and maintain a proper and prosperous culture if you're never actually seeing each other. Now, I know it's not impossible, but I think it's a lot better and optimized if you can have frequent periods of coming together for real engagement with your team.
Absolutely. And we're thinking about it along very similar lines in that it's collaboration days. If you're going to get together, make sure it's for a purpose of sharing ideas and workshopping.
Yeah, 100%. Look, I don't enjoy 100% digital environments. I'm much, again, it's a little bit of probably the traditionalist, especially, given the period of time I've been working. But I do really enjoy having people in a room with a whiteboard and the talking stick. Whoever gets the pen has the right to draw. And I think they're invaluable sessions that the digital whiteboards just don't replicate.
Absolutely. You just mentioned the move to the digital world. A number of the businesses that you're involved in, both implemented portfolios and also Creative Mass, must be the benefactors of that shift as people are looking for ways to become more efficient, but also to provide a better client experience.
Yeah, look, I think you're right. The call to arms for all types of technology, and Matt, obviously, Netwealth's at the forefront of that with the amount of content that you pump out around what's happening in technology itself. And I think it's evident from the number of technologies that advisors and others have at their disposal that it's a cluttered field. There's a big demand, but there's equally a big confusion still out there as to which combination of technologies do I need to be able to prosper in this world going forward. And equally, there's still the same human fears about change management. We've still got people who fear technology. I try to stay at the forefront of it, even though I'm 62 in a couple of this year, a couple of weeks. It's an interesting time that you've got to stay relevant. And for me, probably the one thing I'd like to see is an industry more willing to try than actually kick the tires, which we still tend to be doing a little at this point.
We'll come back to implemented portfolios in a moment because it's quite a differentiated business in the market. But just on, I guess, the technology side, you're involved with Creative Mass. It'd be great to hear a little bit more about that. But also as you just said, a very crowded market, you've also invested and started a business called Lumient. What was the thinking behind both of those?
Well, I'm both a personal investor and represent Implemented, who equally are investors in those businesses. Both were come under the principle from an Implemented perspective around partnering with like-minded individuals. Be that practices. We had 4 or 5 practices who partnered with us in the establishment of the Lumient business, which is basically a values-based advice solution for advisors, SaaS-based. So that one's underway and led by one of the founders of Implemented, that's Sandy Burridge. Equally, Michael Rouse, who leads the Creative Mass business, had an object in mind to deliver better technology to advisors in the market, and when coming across Michael, I found a lot of, again, alignment in the aspiration and the way in which he wanted to attack the market. Um, so they come from a point of partnering in trying to better the elements of advice in this industry. So there's a little bit of nobility in it, if you could say, from an implemented perspective, because we fundamentally believe, both the founders and equally the shareholders of implemented today, we do believe advice is a very noble industry if it's delivered appropriately. And what we try to do, whether it's through implemented in providing efficiency and better service for the individual clients, or Creative Mass in the delivery of financial planning and CRM technologies to advisors, again, in the way in which they can better delivery of their advice, or Lumient in helping unwind some of the mysteries about what the client may actually want and what they actually need, so that it betters best interests. So in that way, they all align. And so we align the economics and try to prosper as a group of individual businesses.
As you're just talking through those three businesses, it becomes apparent that each of them is actually, in many ways, trying to deliver a personalised or potentially even hyper-personalised outcome for the end client. Was it a frustration that with the existing providers in the market that led you to go and invest and dedicate time to those three different businesses, or how did it come about?
Well, again, the alignment for us was, our constituency had implemented all of the practices that have, committed to support our business and our services, all believe in the same thing, that, again, the individualization aspect was critical to them. Efficiency was important to them. So with those two things in mind, we felt they were the overriding business decisions for each of the businesses we spoke of, and that they would have overlap with the implemented constituency, which they do. We've got implemented practices who use Creative Mass or their platform, Wealth Connect, and equally we've got practices that are using Lumient, as well as shareholders of Lumient. So again, it was a natural synergy, put it that way.
Before we bring you the second part of this chat, a little bit about who we are. Celebrating over 20 years, NetWealth is an ASX-listed company that has been rated number 1 for overall user satisfaction by Investment Trends for 8 consecutive years in their Planner Technology Report. As the financial advice landscape changes, it's important to embrace new technology to enhance the way you run your business. With change comes your chance to innovate, explore new perspectives, and realise new efficiencies. NetWealth is here to support you on this journey by providing you market-leading technology, excellent customer support, and expertise to help your business thrive. Contact us today or visit the NetWealth website to learn more and get the PDS, which should be read before making a decision to purchase a NetWealth product. Products issued by NetWealth Investments Limited.
Greg, we've talked about implemented a couple of times, but it might be worth just taking a step back and just giving the listeners a bit more of an overview of exactly what implemented does and maybe how it differentiates in the market, particularly within sort of managed accounts and the broader automated investment solutions.
Yeah, look, obviously there's a regulatory context to it. We're an AFSL as an MDA operator, straightforward. We run both a custody and non-custody services. So as you know, Matt, we're a very, very supportive partner of NetWealth for administration in relation to the majority of our services. And actually, we have a bigger spread of our business with NetWealth than we do on our custody service, which again allows us to take discretionary and self-managed super clients directly in. But fundamentally, what differentiates us from the rest of the market in managed accounts is that we run an individually managed account. So again, that mass personalisation, mass individualisation, where we can change over different assets if people want to in specie personal assets in that they don't wish to they don't wish to sell, or they wish to hold for a long period of time. We can take all of the preferences around things like, ESG, attributes, tax parcels. So it gives the advisor a service in which they can individualize the investment outcomes for their clients and do so in a very scalable way, and one which is a high touch for the individual. So our communications, weekly, monthly, and quarterly, So basically, it's a service which provides that individual outcomes and delivery, but equally does it in a scalable way for the advice practice. So no more ROAs if it's held within our discretion to be able to manage the portfolio, and the way in which the mandates are delivered, we can avoid or look to avoid asset bubbles at any point, so we can go to zero in all growth asset classes. So again, it gives us fairly strong flexibility to manage the client's investments without having to go back each day for approval either from the investor or the advisor.
And within that, obviously they can pick and choose to exclude or include individual sort of constituents or assets, but you also have quite a broad range of options for them. So an investor or an advisor can choose whether they want to be invested via passive investments, if they want dynamic or tactical asset allocation. What's the trends that you're saying in that space? Are most people sort of leaning towards more of a passive portfolio? What are you seeing in the market?
Well, we're seeing obviously, the usage of ETF and other passive vehicles, growing exponentially, and that hasn't abated at all and continues obviously unchecked in many respects. We see a predominance within our own options towards our ETF strategist models. So that's certainly of the, nearing 1.9 billion that we manage on behalf of investors and advisors, that the predominant amount of that, probably 85 to 90%, sits in our ETF models. So we do have some stock picking models as well, but they're very much in the minority at this stage. So people still going passive, but we've got a very active asset allocation, which again, our advisor constituency really like, and it gives them the ability, obviously, for their investors to be, let's say, sleeping well at night, knowing that someone's looking at what's happening and coming at you in the market, rather than having to go back and do 1,000 ROAs to change something if they see a storm on the horizon.
Greg, one of the trends that we're certainly seeing across the platform and more broadly in the market is ESG investing. Have you had much demand from your clients for new portfolios or an ESG overlay?
Yeah, look, it's an interesting one, Matt. I think it's a little bit like the ETFs discussion we just had. Certainly, we're seeing the demand increase, and that's both from end consumers as well as the advisors themselves. Now, we haven't had a big call in prior years. We've been watching it, and we've had some concerns around the ESG market, that it was still, relatively immature, and equally there was, still some of the signs of greenwashing and all the other elements that we're dealing with as an industry. But we have seen a bit of a change in that. It's becoming a more mature market. It is more sought after. Previously, most of our advisors that had a need were able to do so because we are an individually managed account. They were able to substitute assets if they wish. But because it is becoming more mainstream, that creates the need for ROAs or SOAs in some circumstances, obviously at the start of a strategy. But with that in mind, we've started to turn our attention to the fact that we need to do something in this space to make it easier for our constituents. So we're in the process of deepening some research around the whole ESG market from both the demand side, and try to understand how green consumers are looking, what are they exactly looking for, how green to go, what the advisors think about that. There's certainly some warning labels that I think we eventually will, once we get to issuing a series of models, we will put on it. And it is a little bit like, I don't like to liken it to the cigarette industry, but people smoking know they're going to run some risks, and I think it's a little bit the same in the ESG world. You need to understand that these are imperfect scenarios at this point in time, and particularly in our case, if we're doing so through an ETF structure, because you've got obviously it's a different sort of screening process in there. So yeah, it is something that's testing our thinking at this point, but one that we are definitively going to come to market with a set of solutions for our constituents.
You mentioned before that it was very much investor-led, and I think then subsequently you're getting demand from your advisors. Another asset class that we are starting to hear more and more about is Bitcoin and crypto. Have you seen any demand from your clientele for an allocation to Bitcoin or crypto?
Look, we've probably come up against the issue, probably it would be a half a dozen times in probably, I don't know, 5 years. It hasn't been a prevalent one, to be honest. And if it was, it hasn't taken much to dig into for us to decline to participate at this point in time. It's just not in the mainstream, and therefore, obviously, being a business that's pretty focused on trying to become very scalable for the benefit of our constituents, we just haven't chased it, to be honest.
Excellent. Greg, many of the things that we've just touched on, no doubt, draw from trends and, I guess, implemented ideas from the US around the value-based planning, also, or TAMP, so turnkey asset management. What are some of the things that you're seeing overseas that maybe haven't become mainstream in Australia, or that you think we could borrow from the US?
Yeah, look, I'd probably say more in the advice industry itself that, probably the one trend that we continue, and it probably sits back a little bit in validating the emergence of Lumient as a business, is there's a lot more behavioral, values-based advice delivered in the US than it is here. We tend to preoccupy ourselves, and I'll encompass all of us in it, into product differentiation, channel differentiation. But in reality, I think a lot more of it has to do with the situation we've found ourselves in here in the wealth and advice industry. We've just ended, as you know, not long ago, a Royal Commission. Best interest, all of these aspects, I think, really have the ability to be overcome quite readily if we ended up with a better engagement. And I'm not blaming advisors. I'm thinking about some of the tools that they can use, which is, as I said, why it fits nicely into the Lumient space. In the US, a lot more is spent in the front office, in the strategy and formulating a client experience that will ensure that it delights their clients and informs their clients. And I think that's a space we just haven't done enough work on in Australia as a broad sort of comment about the industry itself. Whereas we do preoccupy ourselves with different flavors of product, different, pricing structures and whatever it may be. And I tend to think a lot of that, all it does is make the industry so complex that it actually pushes clients away again.
So thinking that one through, if crystal balling for a moment, clearly you're big believers in the value-based advice and the scalable personalised advice. What are some of the other big changes or trends that you see really making a big difference in the industry over the next maybe 3 to 5 years?
Well, yeah, we've talked about technology, obviously, and the adoption of and adaptation of technologies will continue to be front and center. And I think the other one is exactly as I just mentioned. I think probably the change that we'll see is in the value proposition of licensees, advice-based licensees in the market. I mean, we've seen, the bank balance sheets basically removed. Whether you think that's good or bad, I think there's a more balanced view, and it's not good or bad. It's just that I know it's probably not going to be good for consumers if there was a big fallout in the market, because those balance sheets did provide comfort and underpin to the industry. However, I think with some of the institutional thinking having gone, there's less control at the centre and more probably the risk appetite's just picked up a little bit for more innovation in the sector. So I'm really very interested, and I don't have a solution, but I'm very interested in how the value proposition of licensees emerge in this coming period. And particularly around the economic sustainability of a licensee, because it's again been a bit of a gap or a mystery for our industry. And unless you had vertical integration, you couldn't manage a licensee. So I think this whole world of a better proposition, licensees probably becoming again a little bit more like the networks in the US, where they bring technology solutions, they become buying groups and education, advocation for better ways of doing things. So I think that's probably another element that will emerge here that I'm particularly passionate and interested in. But certainly I don't have a solution for at this point in time, other than the obvious, which is, continue to use Wealth Connect, Lumient, and implemented portfolios.
Obviously. On those three businesses, if listeners want to find out more, what's the best way to go about that?
Look, implemented, obviously, our website's, a great website. I'm sure you can jump on then and you'll get a lot of information and encouragement. And there's a call to action on the website. Equally, Wealth Connect and Creative Mass, contact point digitally is straightforward. And equally, Lumient's a real interesting one. I think people need to, contact. Again, the website has some great opportunity for enrolling or engaging in some webinars. There's regular thought leadership webinars on the go, which there is an implemented as well. We have our a number of lockdown advisor and other forums in which people can engage with us.
Fantastic. Greg, on a personal front, outside of investing into ETFs and the various businesses you are, I think your other favourite investment or asset class is horse racing.
Yes, it is, Matt. It's one of those things that I've taken with me since I was very little, riding horses and the like. So I've been involved for as long as, or longer than I've been in financial services. So whether it's breeding, mainly from brood mares, a lot of broodmare farming, through to ownership of racehorses. I have a Sydney Cup winner in the stable now.
Congratulations.
So we won the Sydney Cup in April of this year. And I've got the horse that won that, Celino, and another one I just bought out of France and landed in this country in August, is also aimed for the Melbourne Cup. So at this stage, I'm on track to have two in the Cup in early November, which would be an excellent time.
Let's just hope that we can actually attend the Melbourne Cup this year, and more importantly, that you can get down to Victoria to hopefully watch your horse have a win.
Well, mate, put it this way: if it would be a sad day if I've got two running in a Cup and I can't get there, but there's every chance that could happen. So I'll take running first and second as a consolation prize.
Well, best of luck. I'll be cheering for you from the sidelines. And more importantly, thank you for spending time to chat to us about the various businesses you're involved in, and great work. Keep up the leadership in the industry.
Thanks, Matt. And I'd certainly return the favour, mate. Keep up the good work, and it's great to have you as a partner.
Thanks a lot, Greg. Thanks for listening to this episode of Between Meetings. For more episodes and to subscribe to our series, visit the NetWealth website, iTunes, Spotify, or your favourite listening service. And if you want to contact me or engage or discuss any of the topics raised, please find me on LinkedIn or Twitter, or send me a private message. We hope you can tune into the next episode.